Awesome. Hello, everyone, and welcome to our session on best-in-class transparency for strategic on-chain asset reserves. Like to welcome everybody who's participating and watching on today's session, from folks on our institutional side, our DeFi side, as well as government leaders. Today's topic is going to be especially relevant for the rise in global interest across digital assets for the likes of Bitcoin and beyond. And welcome everybody to the session. In the webinar, we're here to explore how on-chain transparency and robust auditing frameworks can help institutions such as yourself and governments securely adopt digital assets. A few things that we'll be highlighting in today's session is real-time verification via proof of reserves, data security and privacy considerations, and compliance and regulatory best practice. In terms of our agenda for today, we'll be looking at changes in the landscape, why on-chain transparency matters for both institutional players and on-chain players, who is the network firm, the fine folks who are joining for the podcast today, and implementing robust auditing frameworks. Lastly, we'll review what is Chainlink. We'll observe at an integration and compliance challenges, as well as best practices and future outlooks. All right, and before we get into the changes in the landscape as it is today, we'll do some brief intros. Nice to meet everybody. I'm William Riley at Chainlink Labs, and I am the moderator for today's session, as well as providing the go-to-market perspective from Chainlink. Jeremy?
Hi, everyone. My name is Jeremy Now. I'm a partner here at the network firm. I specialize in audits and attestations, in particular proof of reserves engagements for stablecoins, exchanges, and corporate treasuries and strategic reserves. So happy to provide my perspective here today. Clayton?
Hi, everyone. I'm Clayton Lowry, one of the founders here at the network firm. I lead a lot of our product development on our software Ledgerlens, which has a lot of proof of reserve solutions and that we've worked with Chainlink for a long time on. And thanks, Chainlink, for having us today. We're excited.
Hi, everyone. I'm Danielle Tomasi. I'm on the product team here at Chainlink Labs, leading the Smart Data suite of products, which includes our Proof of Reserve product, which we'll get to talk about a bit today. Thanks for having me.
Excellent. Now we'll jump into changes in the landscape where we can explain the current status quo with governments and enterprises when it comes to their adoption of Bitcoin and digital assets. In this section, we should explore the answers of why we're having this discussion today. So when we look at the current, at least government landscape, we're seeing quite a number of developments. I think it's been a very exciting time to be participating in crypto, seeing a lot of things that we've discussed and hoped for years to come actually start taking shape and become reality. Previously we had large scale adoption from a major countries such as El Salvador, as well as Bhutan doing Bitcoin mining. We've had the likes of Hong Kong and Switzerland also participate in providing regulatory clarity. Personally, being in America, I'm also most excited to see the most recent executive order that's been signed to establish the strategic Bitcoin reserve and ultimately a U.S. digital asset stockpile. All of these changes are really pointing towards a new type of development and landscape that is allowing us more regulatory clarity of what can and can't be done in the crypto space, specifically for the participating actors.
Yeah, it's crazy to see where we've gone in the last 6 months. It's almost been a 180. To your point about the strategic reserve at the nation level in the U.S., I think it's over 30 U.S. states have also introduced legislation for having state strategic reserve or stockpiles. So pretty crazy there. And then it just seems like every day there's something new, either unimpeding banks getting into the space or unlocking or introducing new legislation like the Genius Act for stablecoins. That just seems like it's going to be the catalyst for the next era of crypto.
Well stated, Jeremy. Thank you for that. Awesome. So as we pivot into what does this mean for corporate and institutional momentum as well? Now, if we're looking, more broadly, we see a strategy, formerly MicroStrategy, clearly a strong and fast leader when it comes to holding Bitcoin for treasury diversification. Additionally, we see the likes of BlackRock's and several others, including our partners over at 21 Shares, having spot Bitcoin ETF filings as well as ETP filings in the European market for not only Bitcoin, but a number of different digital assets. Additionally, we see the UAE and Middle East also not holding back and has really progressing frameworks forward in a position where on-chain finance is going to be able to flourish for the years to come. One of the key takeaways, like I personally have, and maybe others in the audience would like to include as well, their perspective. The world seems that it's moving towards a tokenized world. We've heard for some years, from the likes of Larry Fink over at BlackRock that all things will eventually be tokenized and be placed on chain, or, trillions upon trillions of dollars. But without a robust technology layer underneath that provides the true transparency and the infrastructure needed for the likes of proof of reserves on chain, as an example, we ultimately would just be replicating old and opaque systems. And that's definitely quite contrasted with the goals and aims of on-chain finance. For example, legitimization of tokenization for nation states and institutions requires real on-chain verification in such a way that, not only the members of the nation, but also the users and the folks that are doing, international business have this valid proof on chain that can be trusted and utilized. One of the great advancements that we have is on-chain proof of reserves, which is quite pivotal in terms of being a key element for moving these ideas to reality in a large scale and adoptable way on chain. And with that, I would like to turn this over to why on chain transparency matters with our folks over at the network firm, Jeremy and Clayton.
Thanks, Will. I think you made some great points, especially as you think about a tokenized world and what does that future of commerce look like? What does that future of trust look like? And if I were to boil it down, if you think about it, it's with increased adoption from corporations, banks, and governments even, comes increased expectations from all of those parties, plus policymakers, investors, and citizens for having that data verifiable on those reserve holdings. So what is a solution to that? Well, a solution can be publishing that off-chain data on-chain, which can inherit all those attributes of a public, immutable, and an auditable ledger to be able to use that and expand that for governments and all these other parties going forward, right? It's a better trust system. So if you think about what are some of the benefits, real-time visibility in the holdings, like that's a huge differentiator. Today, people get maybe audits once a year, or some governments maybe even never, that they get them done, but they're not even publicly distributed. You don't even see those. But if it's on a public ledger, now that's widely distributed and people can make better decisions. So when we're doing these things on a global stage, having this data on chain can be huge when you're dealing with a counterparty that can prove their reserves, right? Think about extending loans or granting credit, or even just feeling comfortable with your partner or your counterparty on a global stage. So the benefits of real-time information is massive and really game change, actually. And I don't think it's something that we've seen in the traditional world that's going to really unlock opportunities going forward. What you could say, right, is that, oh, governments or corporations, they can simply publish their addresses on chain or put their bank statements out in the open. However, all of these come with pitfalls that on-chain proof of reserves can solve, right? If you are a government, are you really going to want to publish your address for the whole world to see? If we think it's easy, right? El Salvador is doing it. But if you're a huge country and you have a big stockpile or a strategic reserve, maybe you don't want to disclose your addresses, right? You're on a global stage. You have national security concerns that you're going to need to think about. So maybe you don't want to publish everything, right? You might want to publish only certain characteristics of your holdings. What if you're a sovereign wealth fund and you actually don't hold Bitcoin on chain? You hold, IBIT or a Bitcoin ETF, but you still want to provide transparency to your constituents. How are you going to publish that, or how are people going to see that natively on chain unless it's published via an Oracle network? And lastly, if you're using a custodian, how can you see that information if it's commingled at Coinbase or at Binance, right? You need some way of publishing that information that isn't just your self-custodied address. So, and some other benefits, right, of on-chain proof of reserves is that you can keep sensitive information private, right? You don't have to disclose your Bitcoin addresses or your other reserve asset addresses. You can just disclose what you want to disclose. You can report otherwise natively off-chain data like strategic reserve holdings like at an ETF, or what if you have treasuries or or Fort Knox, if you have gold, right? That's not natively on chain and you need to bring it on chain for certain reasons. So you can do that. there with on-chain proof of reserves. And lastly, you can aggregate data sources from, or aggregate data from multiple sources and publish that information, which right now it's hard to do. So we at the network firm have been trying to solve these problems for years now, and we've largely come up with good solutions. We call those solutions LedgerLens. But who is the network firm? The network firm is the US's first crypto native certified public accounting firm. We're comprised of over 20 certified public accountants, engineers, and other industry experts who have been around the block. We've been working solely with crypto companies since 2018, with clients in over 10 countries and 4 continents.
As Jeremy mentioned, we were a leader in proof of reserves. We've been working on this a really long time, and we have a lot of firsts that we're pretty proud of. We did the first CPA attested Merkle tree proof of reserves. That's for the exchange side, which we're not getting into too much on this webinar today, but we Merkleize the exchange database's liabilities so customers can come verify that they were included in that proof of reserves. And then on the asset side, we confirm those assets are there on chain backing those customer liabilities. And we did that for a top 10 exchange, the first accounting firm to ever jump into that space. We also issued the first real-time CPA attestation report over a stablecoin. So those monthly examination opinions on stablecoins have become pretty much an accepted standard globally that all stablecoins do some proof of reserves program at minimum quarterly, most are monthly now. And so we back in 2019 innovated with one of our clients to aggregate all of that data and produce it into an automated auditing report in real time and downloadable for all of their users and any prospective holders around the globe. Working with Chainlink at the time and how like what's something cool we can do to push this transparency forward next. Like we had all the data in real time, we had the CPA attestation layer on top, and partnered with Chainlink to push that on chain. And so we launched the first ever on chain proof of reserves, and that product has had a lot of success. We've got 50 or something NAV, AUM, and POR feeds live on the Chainlink side, and we are the data provider for several of those. Here's just a list of some of our clients. Many of them you've heard of. Most of these are proof of reserves clients. So CoinShares is the largest digital asset manager in Europe. So we do the proof of reserves for their ETF-like products. A few stable coins on here, a few exchanges, as I mentioned, and a couple on-chain proof of reserves. So Backed is one that we're really proud of, that we do several of their stocks and tokenized bonds. So in every 5 minutes on that one, we are querying their custodians and brokers and aggregating the amount of stocks they hold or bonds to back what they've issued on chain. Chainlink is taking our data and putting it on Polygon for use in their smart contracts and DeFi protocols. And also another one, Landex, which is one we've worked with Chainlink and them on. They have tokenized farmland. Okay, so how does this actually work? So most simple form, it's a reconciliation tool between two disparate systems. So mention the exchange side, which is one system is an exchange database. The other system is the blockchain addresses backing those liabilities. For this use case, it would be verifying that the government Bitcoin or nation state Bitcoin is there and confirming that in real time. So we're verifying off-chain data to banks, custodians, checking all the addresses from the different blockchains we have integrated. We build in a lot of checks and things we call ripcords to protect the system from ever producing bad data at high availability. Maintenance, we're monitoring at all times. And then we embed in the CPAs to layer that on top and produce those attestation reports in some cadence all the way up to every 30 seconds, as I mentioned previously. As long as the data is available and highly available, we can produce CPA reports and on-chain updates as frequent as necessary for the issuer or the DeFi protocols.
Yeah, perfect. Thank you. And with that, how does data get to chain? Well, that's where Chainlink comes into it. We take the off-chain world and its many varieties. We transform that and we load that into respective blockchains as needed. And we'll get into that. So Chainlink is a platform. Chainlink is the standard for getting data to chain or moving data across chain. There's different components of what we would call the Chainlink stack or the Chainlink platform. First, at the bottom layer is compute. And this is where we're able to do off-chain computation in a cryptographically secure manner in a way that is very decentralized and trust minimized. Ultimately, this allows us to do things like connect to bespoke data sets, whether this is understanding the price of an asset or understanding who won the game last night, what the weather is in San Francisco. All of these can be programmatically and cryptographically validated in a consensus mechanism throughout decentralized Oracle networks or a collection of nodes that run a consensus algorithm in such a way that throws out any liars, any outliers, any kind of malicious inputs that are coming in. Additionally, we can do other things like cron or conditional triggers. This is where automation comes into it. When you're operating on a blockchain, it has no sense of reality of the outside world. It doesn't know what the price of Ethereum is. It doesn't know the price of Bitcoin. It doesn't know what time it is. So ultimately, you need an Oracle input to provide such things. Additionally, we have other things like randomness, which is super helpful for gaming. This is verifiably proven random numbers such that it can't be manipulated with. As we go up the stack, we now are looking at data. Data can come in many different varieties and needs. So once you perform the type of computation you need, how are you delivering that to chain? One, we have data streams. This is the pool-based mechanism that delivers very low latency data on demand, often for derivatives focused products. Then we have a more broad category, which is market or data feeds. And this is, very traditional, at least for DeFi, push-based oracles where data is being delivered in a mechanism on chain such that any application that exists on chain can consume the data on demand. And then for today's topic, we have a bespoke or a custom type of data feed, and this is around proof of reserves. So this is where you can verify whether it exists on a different chain or in assets held in a custodian or bank account, dollar-backed assets that are being tokenized, whether this is treasuries or simply wrapping assets on chain. Then lastly, we do have our cross-chain mechanism. This is called Cross-Chain Interoperability Protocol, or CCIP for short, which allows the swift communication between blockchains in a highly secure manner, delivering messages as well as tokens. Now, how has this come to be? And, as we look over the past several years of Chainlink being live, I think we've been operational mainnet for well over 5 years now. It has been provable reliability and security, very battle tested and unmatched at scale. Ultimately, over just a handful of short years, we've been able to provide over $16 trillion worth of transactional value. We've been able to enable this with our Oracle networks. And by doing so, we've delivered over 15.5 billion data points to chain. This really has enabled DeFi to become what it is today and grow. And as we look at folks that are coming on chain from the institutional and banking sectors, ultimately they're going to want to operate and ride on rails that have that reliability, have the underlying decentralized and secure nature behind them. The how Chainlink goes about this is in a few different ways. At least when it comes into data feeds, or in this case for proof of reserve, we operate under 3 layers of decentralization. So first, this is the data input layer coming from, whether it's again, a custodian or bank account off chain, or an auditing service. We're able to ingest this data into our node operator network, which is orchestrated into decentralized Oracle networks. These node operators aren't just, some fly-by-nights who are validating a blockchain network. No, these are world-class node operators from the likes of T-Systems and Deutschcom, Stakefish, Blockdaemon, Figment, etc. They are very well versed in how to operate Sybil resistant and highly secure nodes in a way that is done for mission critical operations, especially when, as you see on the left here, we are enabling tremendous amounts of value at any given time. And lastly, another great aspect about Chainlink is blockchain agnostic, which enables Chainlink to be provided and have its services connected wherever it's most valued and needed.
So I can dive a little bit into our proof of reserve product in particular. As Will mentioned, a big part of why Chainlink was started in the first place was to solve the blockchain oracle problem, which is the fact that blockchains don't natively have access to information about the real world, which would include sort of reserve collateralization information that exists by design in a different ecosystem from where the asset is issued, whether that's off-chain in the real world or cross-chain on a different chain from where the asset exists. So what Chainlink Proof of Reserve does, just to reiterate what some other folks have mentioned earlier in the conversation, is that it provides smart contracts with real-time information about the collateralization of an asset that is backed by something that is off-chain or on-chain. And it's built on Chainlink's battle-tested infrastructure of decentralized oracle networks that Will was just describing to reduce single points of failure. Proof of reserve can be used on a whole host of asset types, but we're most commonly seeing this with stablecoins, which of course are on-chain assets that are pegged one-to-one with another asset, usually a fiat currency like the US dollar, for tokenized real-world assets. So a digital representation of an asset that exists in the real world, like a US Treasury. And for wrapped tokens, which is a one-to-one digital representation of a token that exists in another blockchain, like a wrapped Bitcoin, as an example. And across these different asset types, there are different requirements for what type of data is needed to support it. And Jeremy and Clayton both talked a bit about this and the role that the network firm plays in this arena, but it could be off-chain reserves. So this might come directly from a custodian bank or a regulated auditor like the network firm. It could be on-chain reserves. So for an asset that's reserves exist on-chain, we might be aggregating various on-chain addresses. And again, all this is operated by the decentralized Oracle network. So we consume the data from these data sources and then publish this information onto a blockchain in a format that is consumable by smart contracts. And why is this valuable? Beyond the obvious benefits of providing transparency into the underlying asset that is backing an on-chain version, the key value of having proof of reserve information on-chain is that it enables programmability and enhanced security. So the data source that goes into the proof of reserve feed is obviously paramount. The reliability and accuracy of the data is key to the value of the proof of reserve on-chain. Pass it to Clayton to talk a bit about how we've worked with the network firm in the past as a provider of data.
Thanks, Danielle. So yeah, as Danielle said, the off-chain data and the integrity of that data is extremely important. And that's why auditors are a critical role in this function. So what we do here at the network firm using our software LedgerLens is we verify the off-chain data is accurate. We integrate to them using various technologies. API is preferred, but we have parsing through CSVs, SFTP integrations, and manual uploads. Our network of auditors review that data and confirm its accuracy prior to pushing that into the end proof of reserves endpoint. And as part of that, we also build checks for data integrity. We're making sure that the APIs are live. They're not returning any zero or bad data. So we call them ripcords, and that's our system protection to make sure there's no panic or no run, or we're not saying something's unreserved when it's not the case. And then, as I mentioned, we layer on the CPA attestation report on top as needed. Not every proof of reserves we offer is CPA attested to, but many are. And we have a network of global accounting firms that use our technology to attest to those balances in real time and push those to the Chainlink network. Yeah, so to sum everything up, step one, we aggregate all of the data from all of these various sources. We expose that in an endpoint. You can onboard, any issuer can come on board on a LedgerLens and create an endpoint within a few minutes. And then that API has an existing external adapter to the Chainlink network that Danielle will get in on how give an intro on the proof of reserves and how the system picks up our data and produces it on chain for use in smart contracts.
Yeah, as Clayton said, the getting the data in is a critical element of it all. But why is having this data on chain important? An example that you might see of this is embedding circuit breakers. So protocols that are accepting an asset as collateral are taking on some inherent risk in doing so. But they can use a proof of reserve to create a circuit breaker, which can halt or pause activity in a case where an asset becomes under collateralized. Which would prevent both the protocol and any of their users from experiencing losses. Beyond that, asset issuers can take security of their holders a step further. They can do what we call secure minting, which is embedding the proof of reserve directly into the minting function of their asset, programmatically ensuring that you can't overmint. It's embedding logic that says, outright that the reserves must be greater than or equal to the supply of the asset and the amount that you're trying to mint. If that ever becomes untrue, you can halt minting operations and prevent infinite mint attacks, which Will can talk a little bit more about.
So in terms of infinite mint attacks, as Danielle had mentioned, this is one vector of what we call malicious minting events, which proof of reserve, in particular for primary issuance of an asset on chain, which primary asset issuance is defined as the first way that an asset is being minted on chain directly. This is where proof of reserve really prevents against this. Now, we also see this cross-chain as well. And in fact, we've seen malicious minting attacks be one of the most destructive things across DeFi as it stands today. With the likes of, Wormhole and, Ronin having its incidences where it's, been tagged for hundreds of millions of dollars. This was due to cross-chain exploits in the minting functionality itself. Now, one of the really great aspects of Chainlink is outside of proof of reserve, which enables secure minting for a primary issuance. Chainlink's cross-chain interoperability protocol, or CCIP, has secure mint natively baked into CCIP's cross-chain burning and minting, locking and releasing functionality for cross-chain token transfers. And with that, as we conclude today's session, we really want to focus in on best practices and future outlook for the industry. With that, again, we've really seen nation states and institutions are entering the space, and by doing so, we're really going to see the laws and regulations really step up to an environment that requires them to prove their reserves and maintain a trusted state on chain. And this isn't just because of regulation changes, but because of environmental changes. Because operating on chain and the folks that do this have a level of transparency and trust minimize expectations that we haven't seen before in the old ways of doing business. Outside of that, on-chain data publishing is only the first step of getting this done, and arguably the last step in the workflow. First off, we need robust auditing and we need independent validation. These are quite indispensable for the uses and use cases of proof of reserve. And, lastly, envisioning the end state here with everything being on chain, streaming payments, streaming accountability. We'll need these protective layers and privacy and custodial solutions as needed. And this really requires, as we envision here at Chainlink, infrastructure that must support at scale, highly secure and robust processes that meet these global and regulatory compliance conditions. With that in mind, Jeremy, Clayton, Danielle, any other thoughts around the future and the requirements here?
I really like how you prefaced a part of your point, which was envision the end state, right? If you think about where we've been in the last 10 years and where we are now, right? We're starting to see tokenization take off. We're starting to see stable coins. Where we're going to be in 10 years' time from now. Our vision, I think Chainlink shares this vision, is that everything's on chain. Everything's auditable, everything's real time, everything's transparent. So we're building the infrastructure to support that future world. We're not building for today, we're building a decade from now. So if we think about what we talked about here today, is proof of reserves, that's a key component of that, right? It's that on-chain transparency. It's been making sure that it's credible, it's relevant, it's reliable, it can be global. So I really think, like you mentioned, this is a very important component of that future that we're building for. So I'm excited to see where it goes. And I think, especially as regulators and people around the world see the benefits of what public blockchains can do and on-chain proof of reserves can do, they're gonna take it with open arms, right? It's kind of that assurance for the future, really.
Again, institutions and governments are increasingly adopting Bitcoin as their strategic reserve, but outside of that, digital assets as a whole. As we move forward to the future, on-chain transparency paired with robust auditing and tooling for both of these to coexist and communicate will be super crucial for trust and credibility for anybody doing business on chain. If you enjoyed today's session, please don't hesitate to reach out to myself or Danielle over on the Chainlink side, and of course, our friends over at the network firm for their services and consultations as well via Jeremy and Clayton. So thank you everybody for joining us, and I hope you have a good rest of your day.
Thanks for having us, guys.
Thanks, William. Thanks, Daniel.
Thanks,
Thanks,
everyone.
everybody.